What's up, YouTube? It's your boy JB. We don't save, we invest. Today's a great, simple, easy investment strategy on how you can make money with a ETF and with Apple and Facebook. Different, stocks part of the FANG, that can make you a lot of money that have shown and been proven winners thus far. Subscribe to the channel, hit the like button below. Don't forget, we don't save, we invest. And if you want to get 2 free stocks, look at the link below. Webull. If you sign up now, it takes 3 minutes. You'll get 2 free stocks for signing up. And if you deposit $100, you will get 2 more free stocks, $3,700. So that's a grand total of 4 free stocks. Subscribe to the channel. JB. Everybody, make sure you download Investment Calculator. Calculator.net Investment Calculator. This calculator is a great tool. Everybody who wants to invest and look at potential growth long term should utilize this. They also have things on how to pay off your mortgage fast, how to pay off debt faster, and how much money you can put in to knock things off, to pay things down, to increase yourself with more cash, and also to have a better chance at financial freedom, because that's what it's ultimately about. Financial advisor. This is for entertainment purposes only. It's just a guide to show you how to make money and take advantage of the stock market, take advantage of the ETFs, and take advantage of things, 401ks and things you might have, so you can have financial wealth for your family and your family's family in generations to come. Now, if we look here, it's the investment calculator. Historically, Apple, we all know they're a proven winner. So if you would have put $1,000 in Apple 10 years ago, your return will be 28.73% higher. So based off of this number right here, we can give and take that in the last 10 years, Apple has risen about 29% annual return. So whatever amount of money you put in, you can guarantee that pretty much that in 10 years, you would make about 30% profits on your return. So if we go here, and if you were to start, I like to always start low to show you guys. If you would have, if 30% return, if you leave that for 10 years, with an additional $1,000 a year, which is about $83 a year, this is the result you would get. $56,000 after your 10 years. Now, if we increase this, now look, that's still fairly good for putting in 1,000 and then doing 1,000 for 10 years. You only put in 11,000. Look, you put in 11,000 and you made $56,000. That's pretty amazing. Now, if we were to step it up and up the ante, right? And let's say you put in $200 a month. If you put in $200 a month, the grand total would equate to $129,000. That's $2,400 a year for 10 years in Apple with a 30% return rate, and it will produce these numbers. Look at that, $129,000. So for everybody who's getting stimulus and taxes back and stuff, it's very prudent to, invest, because if you have children, this is a great way to be able to pay for their college, help them, your daughters out for their weddings, help your sons out for college, and help family members out, maybe with, medical issues or anything that you feel in your heart that you want to do. This is a great strategy to utilize. Now, Facebook's annual rate of return for the last 10 years. Now look, Facebook produced pretty great. Look at this profit, 105.3% profit. 2018, they're down 25.7%. 2020, they're up 30%. So based off these numbers alone, let's go with Facebook. You put $1,000 in, and we'll say about 35% annual rate of return with a $200 a month, you'd have 171,000. Now, you guys, now let's up it a little bit, right? Because if you're a long-term holder and you want to generate substantial amount of wealth for yourself and your family, you could put $1,000 in now, use your stimulus, and add $200 a month. Your grand total would be, there you go, $3.5 million. Look at this. You see this snowball effect? This is a snowball effect, guys. It just piles up and piles up. And remind you, you only put in $49,000 in 20 years that generated with the rate of return and what you put in, $3.5 million for 20 years. For those who are 20, at 40 years old, you will have 3.5. For those who are 40, at 60, 3.5. It's never too late to start investing. But you got to remember, we don't save, we invest. If you save your money, it's not going to grow exponentially. If you invest your money, it will grow exponentially. This is a simple strategies that you can take advantage of. Now, if we go here to the ETF, Vanguard S&P 500 ETF, their annual rate of return in the last 3 years is 13.8. But now if we go here, in the last 10 years, it's 13.8. Now, Vanguard, ticker symbol VOO, is a great one to invest in. So if we go here and we'll say 14%, right? This isn't a safe exchange traded funds. This is very safe for you guys who feel that playing with the stock markets, individual stocks, is riskier for you. Now, if you guys want to have low risk and lower tolerance, this would be ideal for yourself. Now, if you were to put $200 in at a 14% rate of return annually, you would have $245,000. Now, that's not bad at all for 20 years. You only put in $49K and you made $245,000. Now, you subtract the money you put in, so you have $200,000 profit, which is roughly $10,000 a year. So you guys see how these numbers are easy to, you got to be patient. Like I always say, if you're patient with the market, it'll be patient with you. Ultimately, stocks go up, good ones, and proven winners are Facebook, proven winners are Apple. There's volatility, but anything has volatility with it. You got to be patient and contribute money monthly, because that is the key to success, to earn a better rate of return and to generate more income, more wealth. Now, let's go back to the Apple method, right? Let's say you left that for 30 years. Let's up this and say you put in $5,000. We know tax time's coming around. We know, a third stimulus might be coming around. So let's just say we do this, right? And let's say for people who don't have 401ks, investing through their employer, and they have to do something outside of their employer. Let's just say they feel very comfortable in Apple, and Apple has proven itself time and time again. $200 a month, 35% rate of return for 30 years, and you put down initial $5K. Look at these numbers, guys. $5,000 down. Look at how much money that you would make. $104.8 million. And you only contributed $72,000, and it generated that much. Now remember, Apple has, we're going to say, a 35%. Now don't forget, Apple pays a great dividend per share, so you will also be getting a dividend. And we can't forget that Apple is also a growth stock. They grow. So this is not just saying that, what you will get from the return. You also will get a dividend, a handsome dividend, for being a great investor, and they will pay back to you a dividend. So keep in mind that this is $200 a month for 30 years at a 35%. We can drop it down to $100 a month. We can make it, we can play with this numbers, guys. You can always play with the numbers and see what's best for you. How much can you afford at this time? What can you put into something to invest for your life, for your family, and so on? Now, if you do that for 30 years, you would have $72.7 million off of $100 a month and $5,000 down. It's pretty good, guys. Now, let's say you had nothing to put down and you put in $200 a month. Hey, $64 million. I think that's pretty good, don't you? So what I'm trying to say is, guys, don't wait to invest. You have to start investing. It's a great time to do it. It's always a great time. It's not if you're going to invest, it's when you invest. Don't forget, if you can't stay in this hot kitchen, go outside where it's cold out, right? So don't forget to subscribe to the channel, hit the like button, show some love and support. Don't forget to sign up for your Webull. Use the link below in the description. We don't save, we invest. Start investing. This is for entertainment purposes only. Go out there and make some money, guys. JB.